I think we have to be specific on the specifics. I think broadly we sent the message on where we were on the monetary policy path. And I think everybody understood what we were saying. I think that was pretty clear. So I don't think that was a missed opportunity. I think on other issues, it really depends on what people think the problem is.
Okay.
On liquidity, I mean, there seems to be a sense that rates are going up, and it must be a liquidity issue, so somehow the RBI has to fix that. You know, we have continuously sort of stated what our liquidity position is. And of course, we've made a lot of changes in the liquidity framework, and we continue to review them. And as I said yesterday, we'll continue to review this. In fact, I've called in market participants to understand what it is that they're so worried about on liquidity, because there seems to be a sense that something more needs to be done. Of course, you know, as there is need for infusing long-term liquidity, we use the appropriate instruments, which include open market operations. When there's a need for short-term liquidity, which happens, for example, when government balances build up, we do short-term instruments.
It's just that, Governor, when the system, your RBI has been infusing total, you know, 1,200 to 1,300 billion every day throughout December and January. So clearly there is a systemic shortage of liquidity. I think that really is.
No, but there's
it's not
also
a short-term crunch. It's 2 months is much long.
Well, sometimes depending on what the actions of certain players in the system are, you know, there's a build-up of balances. Now, obviously, people try and offset those. So wherever there is a sense there is permanent liquidity needs that are building up, we act accordingly.
Because 2 months, I think the market players feel is too long a period to justify that kind of reaction.
Well, yesterday the government announced a buyback of 20,000 crores. So clearly, we knew that was going to happen. That was part of the sort of ease on liquidity, because a buyback means money is flowing into the system on a permanent basis.
I'll tell you where the market's worry is. The worry is that Reserve Bank, in its new role of inflation targeter formally, it tends to want to keep inflation, liquidity a little tighter than warranted, only to err on the safe side. And in fact, that brings me to my next question, really.
Well, first let me react then. We have no intention of keeping liquidity tighter, and in fact, we have supplied, you know, through various instruments, whatever the market is looking for. In fact, our longer term instruments are not fully subscribed to, even though they are available. Of course, I can understand.
Rate. It's a function of the yield at which you're willing to offer. That's also that, no?
Yeah, but absolutely, absolutely. But again, you know, there's a price for liquidity, and if the market is not willing to pay the price, then fine. But the point, I think, again and again, that I want to emphasize is that we don't want to keep it severely short. That is not our intent.
Governor, every governor is judged by the number of, you know, policy statements he makes, just like finance ministers are judged by the number of budgets that they present. So you've already done 15 of a possible 18 in your present tenure. We're hoping that you will continue, but 15. So when you look back, you know, given the fact that monetary transmission is so slow, maybe there was something that you didn't really quite anticipate that it would be this slow in the Indian context. In hindsight, entirely with the benefit of hindsight, has the RBI been a little bit behind the curve in cutting rates, just as in the earlier period, it was a little behind the curve in raising rates?
I don't think interest rates are what are holding back the economy today.
Today, no, but maybe about 4 months earlier, 5 months earlier, when sentiment was upbeat, it may have provided that extra kick.
I don't know. I mean, we could always debate it for a long time. Remember, there was a time, people forget this very quickly, there was a time when people said, you're nuts to think that you will bring inflation down below 6. You shouldn't even do this. And you're subjecting the economy to severe stress, don't even think about it. Because now all this is in the background, and you know, oh, it was all the oil prices. Remember, the government has kept back 75% of the oil price decline through higher taxes. So it's not all oil prices. Yes, commodities have helped, etc. But I mean, of course, government food management has helped. but give some credit where credit is due.
Oh, absolutely.
That inflation has come down, and has come down largely according to the path that the RBI set out. So the point here is that when you are fighting in a system which has got used to double-digit rates of inflation, and if you look at our expectation survey, people are still having really high expectations. Of course, world over, the expectations in surveys are higher than the actual inflation. But in our country, it's taken some time to bring that down, and it's still relatively high, close to double digits rather than, well and firmly in the single digits.
No, certainly the Reserve Bank of India deserves a great deal of credit for the monetary policy that you followed. But on a purely dispassionate basis, if you were to attribute how much due to commodity fall, how much due to government's better management of the food economy, and government being a little bit more fiscally responsible, and how much for monetary policy, what would you
we can debate
apportion?
that, but the point, what is important, I mean, when you say behind the curve of this thing, remember that ultimately on one side is borrowing, and a lot of people focus on the borrowing, whether by firms or by individuals. For now, firms seem to be very reluctant to take on credit, and banks haven't therefore found the need to pass through rate cuts to them. But if you look at savers, that was also a big change we needed to make. Remember, our household savings had fallen considerably, and even now they're not at the point where we're comfortable.
But now they're getting close to 3% real. Maybe there is a case for giving them a little less. 1 to 1.5 was what I think you aimed at.
Well, so let's see where the 3% real comes from. Our estimate is this, I mean, last month inflation was 5.5%, that's what we have. The policy rate was 6.75, that's 1.25. And add another 0.25% for the 1-year treasury bill, that's 1.5. We're about where we are. So these notions of 3 and 4%
looking at bank deposit rates,
come from, well, even bank deposit rates, you really talk about long-term deposits to get into the 8% and so on. And even then it's 2.5 at best. But what is true is that for the first time, depositors are getting real rates.
Absolutely.
And that actually requires even a lesson in what real rates mean. Because a lot of depositors are complaining about the fall in nominal interest rates they get and say, I can't make ends meet. Well, you're better off than in the past because your principal is not eroding now.
Absolutely. Governor, another thing that's really been worrying everybody, and including the Reserve Bank of India, is that of NPA management. But if you look at it, it's not the first time. In fact, in the late 90s, the NPAs of PSBs was close to 15%, 15.7, and it came down to 2.3 by 2009. And despite the tightening of regulatory norms, and this was not done because through a very aggressive cleanup, but purely because the economy itself improved dramatically. So in all this, is there some kind of balance that one draws between going after, zealously going after NPAs, punish the promoters by all means, but is there a balance to be drawn where, we don't cut our nose to spite our face? Because the outstanding example that comes to mind to me is Enron, where the promoter got really punished, so much that it disappeared completely, but we have a stranded asset. So do we draw a line somewhere? It's a very difficult line to draw, that we go after the promoters, especially those who are willfully defaulting, but at the same time try and preserve the assets that have been created with public money. And economic recovery is part of the answer.
No, so I don't think there is anything in RBI policy which says we should, which is targeting promoters. We absolutely respect the private sector and the risk they've taken, and there are many promoters who, despite their best efforts, are in trouble.
Absolutely.
Bad luck, government policy, bad structure of the project, and we should not in any way reduce risk-taking in this economy. We have precious few risk-takers. And we should celebrate, of course, the successful ones, but we should also allow for entrepreneurship to not succeed.
Fail, yes.
And we have, under every time we've talked about this, it is about setting the projects back on track. Now, there is a path, which is the easy path, which is not to take any action, to extend and pretend. The project is not doing well. It needs action on the part of the banks, sometimes to write down the debt because the debt is too high, the promoter has no incentive under the current structure. Sometimes on the part of the tariff authorities to increase the tariffs that a project has. Sometimes on the part of the state government to give land permission where a road is needed, or on the central authorities for some environmental permission. Whole variety of people have to come together. What happens in the extend and pretend phase is nobody is actually paying attention. The debt is growing, cost overruns are tremendous, but nothing is being done to start the project. It is bad for the economy for that in that situation.
Sure.
But the banks don't want to push at that point because it requires recognizing that this is actually an NPA, taking the hit, and then saying what can we do under the existing structure to recover as much as we can. What we're trying to do is move from the extend and pretend phase to the recognize, put in whatever resources are needed, and move forward. And for the banks, this requires adequate capital. The government has said repeatedly that there will be adequate capital, allows them to absorb the hits where they need to take the hit, but those hits may be in some cases, again this is not across the board, may be necessary. Now you say growth. Yes, of course, growth is the
ultimate answer.
Is always the tide that lifts all the sinking, all the ships. The problem has been we've waited 5 years, 6 years for growth. Remember, all the forbearance started in 2008.
Sure.
We said, bad crisis, let's postpone problem. It was a small problem then. It would have meant small hits on bank balance sheets. Obviously, since then, the problem has grown. More assets have become stressed, etc. Now, the question we have to ask ourselves is, do we hope and pray? We had 2 bad monsoons. The world economy is in a bad situation. A number of sectors which are in stress here are in stress in the global economy. How long do you think it will take for steel to come back? Are we going to hope and pray that our economy does so well that eventually steel prices are really high? It will take time.
It will take time.
So the point is, do you extend and pretend while waiting for that to happen, or do you take actual action? And that action is precisely meant to put the projects back on track, not to penalize promoters. That is absolutely not the first, second, third priority. Yes, eventually promoters who have behaved badly
do deserve
in terms of whisking away assets, over-invoicing, or essentially holding the banks up, will have to figure out the way forward, and the system will deal with them. But that is not the objective of this exercise. The objective of this exercise is to put assets back on track. When I talk sometimes about promoters behaving badly, I'm talking about a minority of promoters. But I'm also talking about a culture where it is a presumption that the banks take the hit. And on the upside, the promoter takes all the benefit. That is not to the interest of the taxpayers in this country. That is not to the interests of the larger public. But importantly, it's not to the interest of the promoters themselves. To let a few bad apples increase the cost of capital for all of them. When you talk about interest rates, the bulk of interest rates is not the repo rate, but it's what gets added on. It's the 13-14% they're paying, the risk premium, because of bad behavior.
In fact, that brings me to a question that one of our viewers has sent us, Governor. This is Milind Karmyakar. He says, is our legal system so weak that public sector banks can't take action against promoters or defaulting companies for their recovery? And even if you look at the various measures that you've tried, CDR, SDR, despite all that, the fact is that you've asked banks to go in for aggressive preemptive provisioning. That means maybe within the Reserve Bank itself there is a feeling that we're not going to have very much success for whatever reason, because the ecosystem takes time to change. So in such a scenario, by asking banks to get very aggressive, are we following a pro-cyclical approach, asking them to make a provision, higher provisions precisely at the time when they need that kind of flexibility, just a little bit of, a longer rope maybe, temporarily
Again,
maybe.
what is important is capital, that they should have enough capital to take the losses. But if you look forward, again, putting the project back on track is going to give them the cash flow. Today the project is not paying. It's sitting there, the road needs to be built. Nobody is getting the permissions, doing the things necessary to get that road built. which is going to make 90% of the capital investment that's already gone in actually start producing. So those kinds of actions need concerted effort on all sides. And what this is impelling is giving banks the incentive to say, okay, we have the capital backing us, now we can take action on this and move it forward. Decide what to do going forward. Maybe this promoter can work out. Maybe we need to get somebody else in. Maybe the state authorities will cooperate once
and
they
the legal
understand.
system also?
So legal system is a different issue. A lot of this is being done in the shadow of the legal system.
Okay.
Now, if we had a strong bankruptcy code, you could do a lot of out-of-court negotiation, knowing that that was a backup in case things didn't work out. This is how a lot of other countries work.
Because in India, you know that the ultimate refuge is the judiciary. You go to court and get stuck for centuries.
Exactly. So that is the real problem, that we have draconian laws, but the courts interpret those laws as allowing them, even though some of the laws say the courts cannot intervene.
Yeah.
They allow themselves to intervene in those situations. The Supreme Court even has opined on this process. The point is that for the promoter who wants to hold things up, it can get held up for a long time, which is why the instruments we've created, like the SDR, are attempts to get around this. Now, the point is we have to use them well, and we are currently monitoring the process to make sure they are used well. So you do an SDR.
Okay.
Typically do it when you want to, when you don't have confidence in the promoter.
Sure, sure.
If you don't have confidence in the promoter and you do the SDR, you don't want to let the promoter stay in control.
Absolutely.
Or you want to at least have some control over the promoter. So we need to make sure that that happens.
So you've done this exercise, Governor, with all the banks at one particular specific period of time. So how are you now able to quantify the amount of NPAs in the system, even in terms of percentage? The reason why I ask you this is that there's a lot of misinformation floating around. So even if very often people imagine the position to be worse than what it might actually be. So I think there is a great deal to be said for transparency, but somehow the RBI has been a little reluctant to come out with these numbers, and there are two reasons why I say this. In the Financial Stability Report of June, you had given stressed assets of these 5 particular infrastructure sectors. In the December, that comparable number is not there. And despite repeated requests, actually we haven't been able to get the numbers from Reserve Bank of India. And there's also this issue that you have the Supreme Court upholding the ruling of the CIC, saying the Reserve Bank should be more transparent, should give out the names of defaulting borrowers. So is there a case of greater transparency?
Well, let me first on that last point. The reason we didn't give those out is precisely because of previous court rulings, which said you cannot publish the names of defaulters, etc., which are protecting them. No, previous rulings by courts.
That's true, sir.
And our point was we were looking for legal certainty. We have no problem revealing the names of defaulters if the legal system allows us.
Sure, but this is the Supreme Court of the country.
No, absolutely. So now there's a ruling. We have no problem doing it.
So will you be coming out with these names? Because I understand that the Reserve Bank is thinking of filing a petition before a larger bench.
Look, there are different issues involved and people conflate these issues, I think, to the detriment of the larger good.
Okay.
There is a sort of almost an accusation that we are hiding defaulters or protecting them. We have absolutely no interest in doing that. In fact, I mean, to some extent, provided sort of honest, genuine defaulters who are defaulting because of problems rather than willful, are, their privacy is protected and they're not displayed everywhere, which will kill risk-taking in this country. We should be very happy talking about guys who've built the system.
Absolutely.
So we have no problem with that, but there were previous rulings and some uncertainty about the rights of those people, and the Supreme Court has been very strong on privacy rights also. So there was clarity needed. The Supreme Court has come out with a certain view. So
now will you be making those names public?
To the extent there is a public case, we will not stand in the way of those issues. There's a different issue about the inspection reports of banks. There's a lot in inspection reports which are shared with us because we are the regulator, which can cause a certain amount of anxiety in the public, right? And to put those numbers out, to put the data out in an indiscriminate basis may cause panic in the system in certain cases. I'm not saying in all cases, but I can visualize circumstances.
Not individual accounts, Governor, but the NPA system as a whole, total in this.
With that we make clear on a regular basis. When you're projecting out, projections always have assumptions. You have to be very careful that people understand what those assumptions are. Your assumption, for example, that you start with is with growth, there will be a tremendous reduction in NPAs.
But with that caveat,
does it make sense now to say under this scenario it is this percent? You have to map things out. We have mapped it out.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.